Hello everyone, I'm Will Harmon, tax attorney, CPA, IRS enrolled agent. Hope everyone's doing well. I'm here to discuss with you unfiled tax returns and some of the items that surround it. Now this is just a brief video about unfiled returns. In this blog itself there's a lot more information along with additional links to even more information, so please feel free to look at that. So we're going to talk about statute of limitations regarding filing itself and refunds, what the IRS does in the alternative if you choose not to file at all, along with some other measures the IRS attempts to persuade those to timely file. Let's start with refunds. The IRS has a limitation of, it's a later of either 3 years from the due date of the tax return or from 2 years from the time the tax payment was made. So it's a later of the two, and that's the limitation. If you go beyond that, you're not eligible for a refund anymore, unfortunately. Let's discuss IRS filing statute limitations. The IRS considers the taxpayer to be compliant if they filed for the last 6 years. Now that is not set in stone. If there's unfiled returns where the IRS considers there could be some fraudulent or excessive behavior, they are able to go back as far as they want to. Now there are times when people choose not to file their tax returns that the IRS themselves go in and create what is known as a substitute for return. This is where the IRS constructs what your tax return would be based on information they have available, information sent from third parties such as 1099s, W-2s, banking, financial institutions. They will then put together a tax return and make an assessment. Now the big problem with this is that the IRS will not consider any of your credits that you're allowed, any allowable deductions, any exemptions will not be taken into consideration, so you will end up with a higher tax bill. In reality, you may have had a refund if you were able to apply these deductions and credits. In addition to filing your return with a higher tax assessment, you'll end up having to pay separate penalties as well. And typically, penalties associated with non-filing of returns are non-payment of returns and non-filing of returns. Now the non-filing penalty is one that accrues up to 25% of the tax balance due, and it's done on a monthly basis at 5% per month. So this is one you want to avoid at all costs by filing your return. Now the other one is a non-payment of return, which accrues also up to a cap of 25% of the balance due, but it takes 10 times as long because it's 1/2 of 1% per month. So it's 1/10 of that of the non-filing penalty. So to add to this, the IRS also charges interest on the assessed tax going back to the date it was due and on any penalties that were assigned to the account. Now this is being charged at 3% above the federal borrowing rate, so this can add up very fast to a lot of money. So it's very important that this gets addressed. Once the tax assessments have been made, and if you're not able to come up with the payments or make some arrangement with the IRS, you'll now get into the IRS collection apparatus. And this is where they'll lien you, they'll produce levies, garnishments, maybe even get a foreclosure on your home if this goes that far. So this is all avoidable by just getting your tax returns filed, or get help from a tax professional like myself who can do all this for you, from the filing, negotiating for a proper payment plan, abating penalties, making requests for that, or if other resolutions are required, I can help you with that process as well. Feel free to give me a call at the number listed, or make an inquiry on the website, which is also listed here. Now, there's additional information in this blog. Please read on, and by all means, reach out to me if you need any help. Thank you so much. Goodbye.